Something big is always happening in the investment world, but we're not sure how to figure it out. We need tools. We don't need equipment. We don't need tech. What we need are methods. I'm Fred Croft. I'm Chief Investment Officer of RAR Capital Partners, and this is an RAR Capital concept. The method we're going to examine today is called the four-factor investment filter. It's called that because it's got four factors, and you use it to filter your investments. And the four factors are what exactly are we talking about, so what, why is it important, how do I actually do it as an investment, and when do I pull the trigger. Let's start through them in order. Let's think about what. Now, what means we really have to define, have we got a concept or have we got a fad? There's a lot of fad investment out there. As far as I'm concerned, things like AI tend to be very faddish. You know, what the hell is AI? Is it machine learning? Is it stochastic calculus? Is it various heavy statistical analysis, big data? Before you put your money into something, you want to know exactly what the hell you're buying. And the second issue you want to think about is evidence. You know, what are the specific signs that tell me this concept might work? To examine this, we're going to take a concept I've been kicking around. I'm not sure this is going to end up working. I'm not sure we'll end up doing it. But we're going to walk through it with this four-factor set of tools and kind of see it in action. The concept is this. Germany leaves the euro and it restarts the Deutschmark. My evidence for thinking that might happen? Two major elements, one of which is Brexit. We see a real chance that the European Union loses a big participant, which is Britain and its associates. The other of which is German opinion. You read German financial periodicals, and one of the things you see is a lot of angry Germans who are all kind of feeling like the guy who gets invited to a bunch of really expensive dinners, and at the very end, everybody else at the dinner stands up and points and says, "Give the check to that guy." The Germans think they're getting stuck with most of the cost of the European Union experiment, and they're not too happy about it. So that's at least a thesis, and it's a thesis that has some evidence that it might really come to pass. So once we accept that we've got a thesis, so what? Why is it important? Major reason I would say is, what happens if something like that happened? If both the UK and Germany pulled out of the euro, that would probably pretty much be the end of the euro. So what would happen is, instead of the current big three reserve currencies, the dollar, the RMB, and the euro, you'd end up with the dollar, the RMB, and the Deutschmark. That would be interesting because the German central bankers are probably the most respected guys in finance. So their reserve currency would have a lot of credibility. And you compare it to saying, I'm going to put money into the RMB, which is kind of going to end up doing whatever the hell the Communist Party Central Committee feels like doing, or I'm going to put money into dollars where they're printing a trillion of them every week. At that point, the Deutschmark would look pretty good, and it would get all of the advantages of being a reserve currency, which are quite a bit, because you get all these sovereign privileges, and you get people holding your money in their treasuries, and it gives you a lot of power as an issuer. Now, in considering so what, one of the things we do want to think about, is there a downside to this idea? And right now there sort of is. The French and the Germans have talked about, well, gosh, we'll sponsor raising a 500 billion euro bond in the commercial markets that will be backed by the EU and used to give grants to the deserving in the European Union. Now, there are two problems with that concept. Those problems are Austria and the Dutch, because they both think that idea sucks. So even though that's a potential downside, I think there's a real chance it doesn't happen, which means this idea is still in the running. Then you get to the last element, which is it actionable? Is this beyond being a cool concept, something that I can actually go after and make money on? And that brings us to our third element. How? It's not enough that it's an interesting concept that would have big consequences. You got to think, how do I actually use this to invest? Now, with the resurgent Germany, there's a number of ways you could do that. Obviously, you can buy big German companies. You could buy stock in Volkswagen, Allianz, things like that. You can also do short plays. You could say, if there's a Deutschmark, it's going to drive down the value of the pound, of the dollar, and I'm going to short those long term. Those are all possible strategies. The other thing you worry about with how is market depth. If I have to get out of this, is there enough depth to be able to do that? With something as big as Germany and German currencies, the answer to that would be pretty clearly yes. And that brings us to our final issue on this. When do I do it? There's actually a couple of specific when questions you end up having to deal with. First of which is, when do I pull the trigger? You need a specific event, not just, a secret message from God. In this case, I'd probably say the event would be the actual Brexit. Hard Brexit happens. If that happens, that tells you there's going to be big changes that are going to cascade through everything. Now, that hasn't happened yet. Boris Johnson could wake up tomorrow and say, I got religion, I'm with the European Union forever. I don't think that's going to happen, but it tells you until Brexit actually takes place, just keep an eye on it, don't spend your money yet. The other question you have to define right up front relative to when is, when do I get out? No investment is forever. So you always need to think, when have I made enough? Part of that is obviously hurdle rate. If this thing hasn't yielded enough to, cover my cost of capital and my expected profit, I shouldn't be in it. Frequently, you're going to end up analyzing it and saying, what do I think is a realistic upside? That'll be, when it hits it, even though that's exactly the point where market hysteria is going to be going, it's going to go up forever. That's exactly when you sell. Get out of there. Don't try and catch that last dollar, because inevitably you're going to miss the top and you're going to go right back down with it and you're going to get screwed. Last thing you want to think about with when is, when do I cut and run? When do I decide I'm not in this anymore? There's a couple of ways you do that. One of which, when we go into a position, we tend to set up key performance indicators. We say, if this position is right, these are things that will happen. This is just like running a corporation. So we track our performance indicators and make sure we're going in the right direction. We also set up something else, negative indicators. These are indicators that our thesis is just flat-ass wrong. We didn't understand something when we went into the deal. The minute you see a negative indicator come on, that is telling you it is time to sell this thing out. Don't try and work through it. Don't figure somehow it'll all work out. If you don't understand the thesis, you shouldn't have money in it. The other time you're going to consider taking money out is when you see a better option. If you've got an investment that's just working kind of mediocre, and meanwhile you've got another position that's doing really well and you really believe in it, at a certain point you have to ask yourself, why am I hanging with a mediocre? Why don't I just sell it out, put that money into the position that's really working? So what we got here is a really simple way of separating the wheat from the chaff in investments. Just answer the 4 questions. What's my investment thesis? Why is it important? How do I actually do it? When do I pull the trigger? You do that, you're going to save yourself a lot of time in thinking about your investments. You're also going to get yourself a lot closer to making money. I'm Fred Croft, and I'm reminding you to stay skeptical, stay smart, and stay tuned.